Hello ladies and gentlemen, and welcome to the Plain English Investing Guide, your video learning channel for stock analysis. Today, Plain English Investing will be talking about the Relative Strength Index. No, it has nothing to do with P90X or how much weight you can lift, but it does have to do with how a stock performs. Is it overbought or is it oversold? So let's take a look at a formal definition and exactly what it measures. As you can see on the screen, the Relative Strength Index attempts to determine when a stock is in an overbought or oversold position. In an overbought position, the conventional wisdom states that the stock is ready for a pullback. In an oversold position, typically the strength or recent losses have taken away much of the momentum, and in fact it may be cheap and a lot of risk has been taken out of the position such that you can get in at a sufficient discount. What it does is it compares the magnitude of recent gains with the magnitude of recent losses. Of course, if the magnitude of strength is much stronger than the magnitude of the recent losses, then of course we will see the relative strength index rise. Conversely, if the recent losses have more power than the recent gains, we should expect that the relative strength index will decrease. Now that we have a brief idea of the definition of what the relative strength index is, what it does, and how it measures, now it's time to look at a chart. And what we currently have is a typical chart of the Ford Motor Company, the top chart being the daily tracking price, and the bottom chart, clearly pointed out by the arrow, is the relative strength index. And a couple of things you should notice that are not typical of relative strength indexes provided by free services such as MSN, Money Central, and so forth, is that this relative strength index in fact has two red lines on the screen. And these red lines are very important as they mark the levels at which the relative strength index is considered overbought and oversold. So if you look to the right, you will notice that the scale moves from 0 to 100. And the red line on the top is marked at about 75 or 80, and the bottom red line is at about 25 or 30. It all depends on your threshold. And essentially, the wisdom is, as the index rises towards 80, is approaching a position that may be overbought and may be ripe for a pullback. On the other hand, the lower red line, which is at about 20, is considered to be an oversold position, and that would be a good time to enter the stock. And so you can see the chart as it moves up and down that there are certain points when it hits the 20 line and there are certain points when it hits the 80 line. You should be by now a little bit accustomed to what the relative strength index chart looks like and what the top chart, which is the daily price tracker, looks like as well. And you should be able to notice that there is a relationship in how closely the relative strength index moves with the price of a particular stock, in this case Ford Motor Company. You'll notice on the screen that there are two green arrows and two red arrows. And these are to exemplify and display to you very clearly points at which an oversold position and an overbought position are taking place in the stock throughout the year. So looking on the left, we see the relative strength index in the green circle hits the 20 line. You'll also notice on the top chart, which is the price chart, that at the exact same time, the relative strength, the price is also at its lowest point. Clearly a good entry point because it points to an oversold position, a great price point that is also the lowest in the last year. And of course you can see we have had a nice run up of about 80% on the stock. Now of course we don't expect that to be the perfect entry point for everyone, and I think it'd be silly to assume that it would be possible fairly often. So moving along, the same can be said for an overbought position. So again, if we look at the red circle on the relative strength index located on the bottom, you'll see that the stock Ford Motor Company was above the 80 line for a few days, and this was also the very peak of its price, which on the top you can see is clearly labeled in red as well. Henceforth after that, you notice that the price took a steep drop, and then it gained some resistance at about 14 and is trading sideways currently. So these are just some clear examples on a chart of what the relative strength index has the power and to introduce to you, which are good entry points and good exit points. But remember that these should be used in conjunction with other tools. And the reason being is that if you look between the green circle and the red circle, you'll notice that the price rises, however, that the relative strength index actually stays at about that 80 line. So you must be wondering to yourself, well, what happens here? As you notice on this chart, I have highlighted in the yellow box on the relative strength index the points at where the Ford Motor Company stock stayed at about the 80 line, which corresponds to the exact rise in the stock between the green and the red circle. And the reason I've highlighted this point is because this is a point of difficulty where it's very easy to prematurely enact a sell call, which would exit you out of the stock long before the peak at about $18 or $19. And the only way to get around this is to use the relative strength index with other tools, whether it's moving averages, momentum charts, Bollinger Bands, etc. And so this is what I want to impress upon you with this chart. It can't be used alone, and that there are difficulties in reading it at points, but that more often than not, the relative strength index will at least highlight potential points of entry and exit before other indicators, because remember, it is a leading indicator and will oftentimes show a buy or sell signal ahead of when the movement actually starts. I hope the previous 3 slides were a good introduction and teaching tool for the basics of the relative strength index and how it is a useful tool for entry and exit positions, which are very important in order to racket gains on the stock market or any investments for that purpose. So here are some helpful tips to remember when using the relative strength index to analyze your stocks. It is a leading indicator. It will oftentimes signal a buy or a sell position a few days and possibly even a month before the action takes place. Having said that, that's why it is best used in tandem with other tools of technical analysis, whether they're moving averages or momentum charts, which also provide more insight as to what is happening with the price of the stock and the general thoughts and sentiment of the market. And having said that, and as we've reiterated throughout this presentation, is that trying to get perfect timing is an exercise in futility. Remember that even a broken watch tells the time right twice a day. So it's not worth trying to time it perfectly, but at least the relative strength index will get you very close to that bottom or top. That way you can maximize your profit and minimize your risk. That brings us to the conclusion of today's lesson about the relative strength index. Believe me, it will aid you tremendously in finding the right entry and exit points on your stock, especially if you use it in the right way with other tools together to get a really full and colorful picture of exactly what's going on with the stock. Remember, it's also important to understand the news and the company as much as possible before investing. Remember, you are investing real shares in a real company, and therefore you should know as much as possible about it. So that brings us to the conclusion of today's Plain English Investing Guide, your video learning channel for stock analysis.